Okay, seems like everyone's about already back with us for today's webinar. All right, so for those of you who just joined us, all right, can you just drop a yes in the questions tab if you guys can hear me? You can hear me loud and clear. That's the most important. And of course, you can see my slides as well on support and resistances projection. All right, so if you can see my slides and you can hear me loud and clear, can you just do me a favor and drop a yes in the questions tab so I know that you can hear me too? Okay. All right. All right. You guys can hear me. That's great. All right. So without further ado, all right, we can begin on today's webinar on support and resistances projection. All right. Before we begin, my name is Don. I'm from Everest Fortune Group, and in partnership with XM, we'll be bringing you webinars or Tradepedia webinars every Tuesday and Thursday to share with you guys more about forex trading and the world of forex trading. And for today's webinar will be the second part on support and resistances. All right, second part on support and resistances, and today it will be about projection and more specifically using Fibonacci for support and resistances. All right, if you guys signed up on the XM website, all right, if you guys signed up there, you will see Fibonacci magic. All right, what exactly is Fibonacci magic? Why do we call it Fibonacci magic? Well, Fibonacci is one of the techniques that I use myself, all right, most regularly. All right, I use it quite often to help find good support and resistances, good levels to play off of. And I will show you guys Fibonacci magic, how to use Fibonacci retracements, extensions, how to find good levels of support and resistances that will really benefit you guys, all right, help you guys to better understand how price might react at these levels. All right, so that's what we mean by Fibonacci magic. That's what I'll be going through today. All right, on support and resistances. All right, for the slides for today's webinar, you'll be learning, of course, the Fibonacci series, all right, how it was derived, where it comes from, the history of Fibonacci. All right, you'll also be learning how this leads to the golden ratio, right? The golden ratio, and of course, you'll know how to apply the Fibonacci numbers to find support and resistances. All right, it's the most important part, right? Fibonacci, using Fibonacci to find good support and resistance levels that you can use when you're trading and you can use to play off of them. All right, so in today's webinar, I'd like to make it more interactive. So if you guys have any questions along the way, all right, about Fibonacci or anything in particular that I'm going through today, all right, anything in particular I'm going through today, you guys have any questions, just feel free to drop it in the questions tab. All right, feel free, just drop it in the questions tab, and I'll be more than happy to answer them for you. Okay, so with that out of the way, let's start on today's webinar on Fibonacci. All right, so what is Fibonacci? Where does it come from? Comes from this man, all right, this man, Leonardo Fibonacci. You can see him right here, all right. Very handsome man in the Middle Ages, all right. Leonardo Fibonacci, he was known as the greatest European mathematician of the Middle Ages, all right. He was one of the first people to introduce the Hindu-Arabic numeric system into Europe, all right. That's just the numeric system that we use, all right. And also, he also created the famous Fibonacci series. All right, Fibonacci series named after this man that discovered it. All right, the man that discovered it, Leonardo Fibonacci. That's why we call it the Fibonacci series. All right, what is the Fibonacci series? What did this guy's big brain come up with? All right, so this is what the Fibonacci series is all about. It's just a unique series of numbers. All right, Fibonacci series is just a unique series of numbers. And how does the series go? It goes like this. All right, it goes 1, 2, 3, 5, 8, 13, 21, 34, so on and so forth. And how we notice, all right, first thing we notice about this series of number is that how do you derive it? All right, it's very simple. All right, each number is derived as the sum of its previous two numbers. All right, sounds might be a little bit confusing. All right, basically what I'm saying is the next number is the sum of the previous two numbers. So 1 plus 1 will give you 2. All right, 1 plus 2 gives you 3. 2 plus 3 gives you 5, and so on and so forth. All right, that's how you get the Fibonacci series. All right, that's how you get Fibonacci series. You just take the first two numbers, add them up together, you get the next number. All right, each number is the sum of the previous two numbers. All right, what's so interesting about this Fibonacci series? The next thing that you will notice, all right, is that if you take any two numbers next to each other and you divide them, you find that they are connected through the same ratio. So let's just look at these two numbers for now, 55 and 89. All right, let's just take 55 divided by 89. What do you get? 0.618. All right, this number is going to be popping up many times as we're talking about the Fibonacci series, about Fibonacci in general. All right, so do take note of this ratio over here. All right, so you take 55 divided by 89, you get 0.618. All right, what kind of number is that? Well, let's just look at the next one. All right, let's look at the next set of numbers. Let's take 89 divided by 144. All right, the next two numbers, you get 0.6182. All right, and if you take the next two, 144 divided by 233, all right, what do you think you guys will get? All right, by now, you guys are pretty smart, pretty sharp people. You'll probably guess you'll get the same number, 0.618. All right, that is the same ratio that all these numbers are connected by. So if you were to take all these numbers, you divide the next number, all right, this number by the next number, you'll get this 0.618. All right, this is what we mean when we say that the two numbers, they are basically connected through the same ratio, 0.618. All right, so what about if we were to leave one number in the middle empty? All right, I'll show you more ways that these numbers are connected. All right, let's leave one number in the middle empty. So we take one number, skip it, and the next number. All right, for example, 233 and 377. All right, so if we were to leave one number empty, all right, let me just cycle through all this. All right, of course, 233 divided by 377, you get 0.618. However, if you skip it, 144 divided by 377, then you skip one Fibonacci number, you get 0.236. All right, you get 0.382. Sorry. All right, so this is what you get when you skip one number, right? And if you take 0.382, this number that you get, you divide it by 0.618. What do you get? You get 0.618 again. All right, so this number really comes back a lot. All right, 0.618. All right, this number really comes back a lot. It's a really key level. All right, you'll find out when we are discussing on Fibonacci retracements and Fibonacci extensions later on. 0.618 is a pretty key number. It's a pretty key level that we want to look out for, right? So let's just take a look. 0.236, if you get 89 divided by 377, so this time you skip two numbers, all right, you get 0.236. And if you take 0.236 divided by 0.382, what do you get? 0.618 again, all right. So this 61.8%, basically, that's what that's the level that keeps coming up, right? Same number that just keeps coming up, right? It's going to be a really key level, all right? So this is how we see basically not just the numbers, all right, not just the numbers in the Fibonacci series are connected to each other, all right, the ratios between these numbers, whether you skip one number, you skip two numbers, all right, they're still connected by the same number. And what's that number? 0.618, all right? So there are many other ways. There are many other ways that these numbers are connected to each other. So how about we take the larger number divided by the smaller number? We do the opposite calculation. So for example, we take 377 divided by 233. All right, we find another one of those magic numbers. That's what we call Fibonacci magic, right? This is another magic number, 1.618. All right, if we take we leave one number in the middle empty, so we take 377 divided by 144. What do we get? We get 2.618. All right, and if we leave the third number in the middle, all right, we leave two numbers in the middle empty, 37 divided by 89. What do we get? 4.236. And basically, what is going to come up again and again? 1.618 divided by 2.618. Again, 61.8%. It's coming back up again. All right, you divide it again, 0.618. All right, this number just keeps coming back up. All right, so you might be asking me, what is this magic number? All right, what is this magic number that keeps on appearing throughout this series of numbers, 0.618? All right, it just keeps on popping up. All right, seems like it is the number that connects all the Fibonacci numbers together. The Fibonacci series, basically at the core of it is this 0.618, right? So what is this magic number? All right, what is this magic number that just keeps on popping up? 0.618. It is the number that Pythagoras spoke about long time before Fibonacci, long time before Fibonacci series was even invented. All right, it's related to the golden ratio. All right, this is a number that Pythagoras spoke about a long time before Fibonacci. All right, so on any given line, what Pythagoras deduced is that on any given line, we have a unique point in the way it divides the line. All right, what does that mean? Let's just look at this line. All right, so Pythagoras stated on any given line, right, there is this point on the line that's unique. All right, it's not in the middle. It doesn't just cut the line in half. It's a little bit to the right. All right, so for example, this point over here, you can see it's a unique point. All right, all lines should have them. Why is that so? Why is this point so unique? All right, because if you divide B with A, all right, you will get the same number as dividing A by A plus B. All right, so B divided by A is equal to A divided by A plus B. What is that? The 0.618 comes up again. All right, 0.618 comes up again. And the result of this division, all right, is the golden ratio. All right, the golden ratio, this is what links Fibonacci series to the golden ratio, 0.618. All right, and this golden ratio is denoted as the Greek letter phi. All right, this is what the Greek letter looks like. If any of you still write with Greek letters, all right, 0.618, the golden ratio. All right, this is what Pythagoras was talking about even before Fibonacci was born. All right, there's this unique point, and this unique point gives you the golden ratio. All right, the golden ratio is 0.618. All right, this is the golden ratio that Mr. Pythagoras was talking about. And then when Fibonacci came up with his Fibonacci series, all right, he discovered that these numbers, these special numbers, are all connected by that same ratio. All right, so this is the golden ratio. And what's so important about the golden ratio? So if you use the golden ratio, you can basically create what Pythagoras calls the golden rectangle. All right, the golden rectangle is based on the phi ratio, right? And at risk of looking like a nerd, I will be showing you guys how the golden rectangle is formed. All right, so just stay along with me. I'll keep it as simple as possible. All right, you guys can see how the golden rectangle basically forms, and in the golden rectangle, you guys can basically see the golden spiral forming. All right, so let's just assume that we have a square dimensions 2 by 2. All right, perfect square, right? 2 by 2. So we start from the middle point. So if you take from the middle and you draw a diagonal, all right, so the middle point is here, right? You guys can see this. Very clear middle point. You guys draw a diagonal across the square. You create this rectangle, correct? So I'm pretty sure all of you will know the Pythagoras theorem. All right, Pythagoras states that the length of this diagonal line over here, all right, what is the length of the diagonal? All right, basically, all right, so this is 1, this is 2, right? How do you find the length of the diagonal? It is square root 5, right? Because 2 square plus 1 square, and you square root it, this is the diagonal, right? A square plus B square equals C square, right? So that's the Pythagoras theorem. So that's the length of this diagonal, square root 5. All right, what is square root 5? It's basically, if you round it up, it's 2.236. All right, that is the length of this diagonal. All right, so what I'm gonna do is basically I'm gonna take this diagonal line and put it down. All right, put this diagonal line down and create a rectangle. Right, see that? And then I complete the rectangle. So this line over here, follow my pen over here, this diagonal line, I put it down here. Okay, so this is how I create the next rectangle. All right, so let me remove my drawing so it's not so complicated for you guys. All right, so if you put this line down, the distance of this line, what is the distance of this line? 1 plus 2.236, correct? Which is, all right, 1 plus 2.236. Sorry, 2 plus 2.236. So this entire line, this entire rectangle, 3.236. So as Pythagoras said, if you have a rectangle where the relationship between the two sides is the number phi, then you have a golden rectangle. All right, so you have a golden rectangle. If this rectangle, all right, this big rectangle, if you take the smaller side divided by the longer side, all right, and you get the number phi, this is a golden rectangle. It follows the golden ratio. So one of these sides is 2, the other side is 3.236, correct? If we make this rectangle here. All right. If you divide 2 by 2.236, you get 0.618. Hence, we have created a golden rectangle. This entire rectangle over here you see on the screen is basically a golden rectangle right there. All right. Pretty cool, right? Okay, but what I want to show you is that within the golden rectangle, you can draw more and more golden rectangles. All right. So if we draw a diagonal across the entire rectangle, follow the golden line over here, golden rectangle, follow the golden line over here. All right. And if you draw a diagonal across the whole rectangle, where it crosses the line, it is again the golden ratio. All right. It is again the golden ratio. And here we have another rectangle where the one side is 2 and the other side is 1.236. All right. So here it is again another golden rectangle right there. You can see it popping up over and over again. So if you divide 1.236, you divide it by 2, all right, you get, what is that? 0.618. Once again, the golden ratio is coming back up. And you can just do this again and again and again. All right, you can continue drawing diagonals, and then you draw another rectangle, and draw another rectangle, and keep on drawing those rectangles until you form what is the golden spiral. All right, using the golden rectangle, you continue to draw those rectangles, and you draw those diagonals, you can form what we can see, the golden spiral right there. Can you see that? All right, so that's the beauty of the golden rectangle. You can continue to cut it down lower and lower and smaller rectangles, and what you form is basically a golden spiral. And the golden spiral, it moves by the number phi every 1/4 turn. That means if you take A divided by B, it's equal to 0.618, B divided by C is equal to 0.618, so on and so forth. All right, that's how you create the golden spiral. All right, so what is the golden spiral? It's derived from the golden rectangle and golden ratio, right? So it basically is a formation that is really appealing to the eyes. All right, you can see it in everywhere, right? In nature, we find them everywhere in nature. The golden spiral, the golden rectangle. All right, you can see branches and roots extend based on Fibonacci numbers. All right, so the shape of a seashell is also you can see the golden spiral in the seashells. All right, another case is a photo of a hurricane from a satellite, and it takes a spiral, and it's not just any spiral, it's a golden spiral. All right, same applies if you basically, you can see it in water. All right, you can see it in water. All right, next time you guys go flush the toilet bowl, you can see the spiral. It is also the shape of a golden spiral. All right, flush the toilet bowl next time, take a closer look. All right, you're not going to do much math as you flush the toilet bowl, but basically the golden spiral is there. All right, if you see it, you can continue seeing it many times in nature. All right, and where else can we find phi? All right, we can find phi in space. All right, in the galaxy, a spiral galaxy. Again, it follows the shape of a golden spiral. Again, all right, it is a sequence. It is a sequence of numbers. It is a ratio. It is a formation that just always appears everywhere in nature, in the universe. All right, it is also in your own human body. All right, human bodies. All right, human bodies. I'm sure you guys have heard of like the perfect body measurements. All right, perfect body measurements. Human bodies that are considered perfect are symmetrical. Why? Because they are based on phi. It's a very subconscious thing. You don't even realize that you're associating the golden ratio to a perfect body. All right, but it is. All right, if it is a symmetrical body, a symmetrical human body, it is also based on phi. All right, it means if you measure the distance, all right, here's a fun fact, right? If you measure the distance from the floor to your belly button and it's 1 meter, then from the belly button to the top of your head is 0.618 meters. All right. Once again, your golden ratios. This is considered as the perfect body. All right, quote unquote the perfect body. All right. So if for what you can see the golden ratio in again in your human body is in your DNA. All right, it's in your DNA, the core of what you are. Right. So in your DNA, you can see a golden ratio as well. Our DNA is made up of golden rectangles. It's 21 by 34 angstroms. All right, so you can see the golden rectangle and the golden spiral in your DNA as well. All right, so phi is everywhere. All right, the golden ratio is everywhere in nature, in space, even in your cells. So phi is everywhere around us. All right, and of course, you will be able to find it in the financial markets as well. All right, it's been observed that prices find support and resistances at Fibonacci ratios. And some of you might ask me why. All right, why is what does price have to do with Fibonacci? What does it have to do with the golden rectangle, the golden spiral, the golden ratio 0.618? And basically, I've done some reading, all right, prior to this. What I realized is that Fibonacci is basically something that's very pleasing to the eye, right? Very pleasing to the eye. People look at it and it looks just about right, all right? And that's basically why it just keeps on coming up in the financial markets. Some people might argue that it is a self-fulfilling prophecy. All right, if everyone's looking out for this golden ratio in the financial markets, all right, if the price retraces by 0.618 or 61.8%, and everyone's looking out for that level to get into the market, all right, then obviously it will happen, all right, because everyone's looking out for that level, and at that level they get into the market, they buy in. Of course, there will be a bounce, all right. So that's why some people argue that uh, Fibonacci is something of a self-fulfilling prophecy, all right? It's just because everyone thinks it will happen, that's why it happens, all right? But because it is such a strong belief that many people are looking out for, all right, Fibonacci can be seen to happen again and again because a large majority of the market is looking out at these levels, all right? You can't just ignore the levels because everyone is just looking at them. It becomes very strong support and resistances to look out for. And Fibonacci has become one of the most effective ways to find support and resistance levels. All right. So some might argue it's just a self-fulfilling prophecy. There's no real backing behind it, but doesn't take away from the fact that it works. All right. It works and it happens. All right. 0.618, all these Fibonacci ratios, you can use them and you can use them quite effectively, all right, to find good support and resistance levels within the market. All right. So how do you do that? How do you do that? Let me show you guys. All right. So for example, if you're looking for support levels, all right, this is a very basic way of using Fibonacci ratios to find support in an uptrend using Fibonacci. How do you do that? So if you were to find a support in an uptrend, let's see this uptrend over here, right? You guys can see the higher highs and the higher lows. All right, very clear uptrend. So how do you find support? What you do is you basically draw Fibonacci from the all-time low to the all-time high, right? From low to high, and always from left to right, all right? So you draw it from low to high, Fibonacci retracement. All-time low, all-time high, you draw it all the way up. And you can use the 23.6%, 38.2%, and your golden ratio 61.8%. These are levels that you can find and use for potential support, right? These are levels that you can use for potential support. Right, so that's finding support in uptrend using Fibonacci. And as you can see, usually it does react at one of these levels. All right, can't tell you exactly which levels. All right, after this set of slides, I'll be going through with you guys how you can use Fibonacci retracements and extensions more effectively. All right, but for now, if you have to find support in an uptrend, you draw from a low to a high, and you can use these Fibonacci ratios, these Fibonacci levels, all right, as potential supports. So what if you were to find resistances in an uptrend? All right, so for resistances, let's take a look at this uptrend. All right, what you do is you draw Fibonacci from the all-time high to the last low. All right, the last low. So you see this all-time high and the last low. And of course, because it's an uptrend, it will be a higher low. All right, so just look for the last higher low. And you want to look for a resistance level. So what you do is you draw that Fibonacci, and you can use the 161.8%, the 261.8%, and 423.6% level. All right, these are potential resistance levels. And what you guys realize, all right, 161.8%, 261.8%, 423.6%. All right, we have seen these numbers. All right, we have seen these numbers come up again in when we were discussing the Fibonacci ratios. All right, these are the numbers that you get, and of course, when you see it happen again and again, right, the market tends to respond, all right, at these levels, right? So it tends to bounce at these levels. Once again, I can't exactly tell you which level it will respond at. All right, will it respond at the 161.8? Will it respond at the 261.8 or at the 423.6? I don't know for sure. All right. If I knew, I wouldn't be giving this webinar. All right. If I knew, I wouldn't be giving this webinar. All right. But what I can tell you is these are levels, key levels that lots of people will be looking at. And of course, when lots of people are looking at these levels, all right, these levels become key levels to take note of. These are where we expect that price might have a reaction at. All right. So that's how you find resistances in an uptrend. All right. So Fibonacci for resistances, you can find them in a downtrend as well. All right. So in the case of a downtrend, what you want to do is to draw a Fibonacci for resistance. All right. Draw a Fibonacci retracement from the all-time high to the all-time low. Once again, from left to right. You always want to draw from left to right. And in the case of finding a resistance, you always take from a high to a low. All right. Take from this high to the low, all the way at the bottom there. So what you can do, once again, use the 23.6%, 38.2%, and 61.8% for potential resistances, all right? After you draw this retracement, you expect that there will be a reaction at these levels, all right? 23.6, 38.2, and 61.8, all right? That's where you expect a reaction at, all right? And again, for support in a downtrend, all right? So for support in a downtrend, you can see this downtrend over here, you just draw Fibonacci from the all-time low to the last high and the last top, again from left to right. All right, because it's in a downtrend, all right, it's going to make a lower high, right? So you just draw from the all-time low to the last lower high or the last lower top over here, and you use 161.8, the 261.8, and the 423.6% levels. They are potential supports. You see, when it hits, it tends to bounce. All right, tends to bounce, hits, tends to bounce again. All right, so that's how you draw Fibonacci for supports in a downtrend. All right, this is how you use your Fibonacci retracements. All right, so that's actually the end of my slides, but not to worry, I still have more things for you guys to look at. All right, so what we've gone through earlier over here, all right, in support, to find support and resistances in a downtrend, you're just using very, very simple Fibonacci retracements, all right, from all-time high to an all-time low, or an all-time low to an all-time high, or to the last low high or lower low. Very simple Fibonacci retracement. And let me show you that it does work in the market, all right? Let me just bring up my trading view. See here. All right. So we take a very commonly looked at pair, euro dollar. All right. If I were to just erase everything over here, you can see that it is in a downtrend. All right. It's in a downtrend. So imagine that price is somewhere here. All right. I'll just replay till about here. All right. You know that the price is in a downtrend. All right. Very, very clear downtrend. All right. It's low, this high, this low, lower high, lower low, sort of a lower high. All right. And then it pushed lower to make a lower low. What do you expect from this price? The price movement next. All right. What do you expect? Of course, you expect the next lower high, but you just don't know where the next lower high will be. All right. So what you can do, once again, how I like to take my Fibonacci retracements. All right. So how I draw my Fibonacci retracements, all right, it doesn't have to be the all-time high, the all-time low. What I like to look out for when drawing my Fibonacci retracements is basically I want to find a clear market movement. All right, I like to find a clear movement from a swing high to a swing low. All right, I don't like movements that are very, very choppy. All right, for example, all right, if I take a retracement from here to here, oops, sorry about that. All right, so if I take a Fibonacci retracement from here to here, all right, if you look at the trend line, all right, the line that the retracement is drawn at, you can see that price doesn't really follow the trend at all. All right, it's not a straight or a clear market movement from this high to this low. All right, price just kind of chops around. All right, it's very far away from the trend line. So I don't really like to use Fibonacci retracements in this way. All right, of course, it depends on what kind of time frame you're looking at. All right, if you're on the daily, all right, and you zoom into the if you're on the daily and you draw a really nice Fibonacci retracement and you zoom into like the 1 hour, the 30 minutes, it might not look as nice, all right? It might not look as nice, all right? Because you're zooming into the lower time frames, all right? Lower time frame, a lot more information, but also a lot more noise, all right? So you have to find a time frame that you are most comfortable and most the time frame that works best for you, basically. All right. So what I like to do is I like to basically take Fibonacci retracements at the levels that I expect. There's a clear market movement. So where is there a clear market movement? I can see from this high to this low over here. It's a very clear movement, right? So if you look at the trend line again from where I drew the Fibonacci retracement from the high to the low, you can see that it's a very clear movement down, right? Not much chopping across the trend line, and the price doesn't move very, very far away from the trend at all, all right? So it moved from this high to this low, and it's almost, all right, almost a pretty clear movement downwards. All right, this is what I would consider to be a pretty decent level to look at. All right, pretty decent level, pretty decent Fibonacci retracement to draw, and the levels are pretty good to look at. All right. So now that I've drawn these Fibonacci retracements, all right, I just put up all the Fibonacci retracement levels, all right, just because we don't know which one is going to react that yet, right? Remember, when I spoke to you guys about the 23.6, the 38.2, 61.8, even if you use the positive Fibonacci retracement, the 161.8, all these are levels that you can look at, all right, but you don't know exactly which level it's going to react at, right? So you can't have a very clear idea of where the level is going to be. However, all right, what I like to do is basically to find levels with a high level of Fibonacci confluence. What is Fibonacci confluence? All right, Fibonacci confluence to me, basically it is just finding levels where many Fibonacci levels line up at. All right, so for example, if you were to take a long-term Fibonacci retracement and you find a level there and you zoom back down into the shorter term, you draw another Fibonacci retracement, a clear market movement, and there is also a level that lines up at that level that you were looking at. All right, then I would consider that level to be slightly stronger. All right, slightly stronger because there are many levels that line up there. Long-term Fibonacci retracement, short-term Fibonacci retracement, and also Fibonacci extensions. All right, so for in this example, I'll show you guys what a Fibonacci extension is. All right, Fibonacci extension is basically zigzag movements. All right, you always want to look for these zigzag movements. So what do I mean by that? All right, so you always want to look for these kinds of movements in the market. All right, zigzag. All right, very nice little clear Z. All right, or if you were in the other way, you would look at this. All right, very clear Z movements. All right, what you're doing is you're basically projecting the movement forward. All right, so for example, let's say you see this movement upwards. Okay, let me just move to a white background so I can show you guys without price being all over the place. All right, so for example, you see a very clear main market movement up, correct? All right, so you see a very clear market movement up, and then the market kind of retraces a little bit. All right, so what you want to basically do, right? What you want to basically do is you expect that it will make a higher high. Let's just assume it's in an uptrend. You expect it to make a higher high, but you don't know exactly where it will hit. All right. So what you're expecting the market to do is basically a zigzag move up, right? And that's when your Fibonacci extensions become very useful. All right. What you're doing is basically you find 3 points: this low, this high, and this low again. And what I do, all right, what I do is I like to use my extensions from 61.8% and above. So 61.8%, 78.6, 100%, 100% and 78.6% extensions are extensions that I've come to realize are pretty strong levels to look at. Lots of people are looking at that. But you can also use extensions above that, 127.2, 161.8. All right, if you were to use, all right, just remember to back test it and make sure that the strategy works for you. But these are all valid levels to look at. All right, but what you're basically doing, all right, is basically you are projecting this initial main market movement, the uptrend, from the point where the retracement ends. So what you're saying is, okay, this market movement has happened. All right, there is a retracement, and I want to know exactly where it will hit from here. All right, so you're doing is you're taking this main market movement after the retracement has ended. From this point onwards, you are projecting the first movement up. Okay, up to that level. All right. So if you say you want to use the 61.8%, then you're saying that, all right, the market will probably move 61.8% of this initial move from here onwards. And the same logic applies to the rest of your extensions, 78.6%. If you use 100%, what you're basically saying is this entire move will repeat itself from this point of retracement onwards. It's going to move this entire move again from this point onwards. All right. So that's how extensions work, and that's why you want to look for the zigzag. Let's say if it moves 100% from here, all right, basically you can see a very clear zigzag movement. All right, so whenever you're trying to use extensions, Fibonacci extensions, you need to look for these clear zigzag movements that appear in the market. All right, Fibonacci extensions are also another way of using Fibonacci ratios. All right, just projecting the main market movement forward from that time of a retracement. All right. So let me just remove all this, and we go back to the chart on the euro dollar. All right. So let's say we are here and we expect the new lower high to be forming. All right. You guys can look at this point and you can immediately see this retracement. 1, 2, 3. Right. Right over here. Okay. And you can see, right, there are levels that are lining up right away. All right, 61.8, 78.6, pretty close to the 38.2%. All right, so you can see this level is a very nice level that you might want to look out at. 100%, 50% are also lining up. So these are possible levels that you want to look out at. All right, but for me, all right, if I were to be looking at this graph, I would probably I would look at this area. All right, because 38.2%, pretty strong Fibonacci retracement, and the extension that you have drawn is also lining up here, 61.8, 78.6%, pretty close to this level. Actually, I would look more at the 78.6% level. All right, so you expect that there's going to be some reaction here. All right, at this level, somewhere here. All right, of course, you want to be as accurate as possible. All right, but what we can see here, this level is pretty good level of Fibonacci confluence. All right, so if I were to play, all right, you can see that reaction was very, very clear, right? We remove that. Take a look at this point over here. All right, so price came back up to this area of really strong Fibonacci confluence level, all right, and it reversed. It came back up to retest, and it reversed really strongly from there. All right, you can see this market movement. Basically, it's this movement up, then a rejection, movement up, test the confluence again, and it pushed really, really far away from there. All right, that's how you find really strong levels that you should be looking at. All right, you should be looking at in the market. All right, these are really strong areas of Fibonacci confluence that you can look out for, and that's how you narrow down your search. All right, basically you know that these levels are key levels to look at: 23.6, 38.2. The 61.8%. All right, you know that these levels are really important levels to look at. Then you are basically combining all these levels together to find areas of strong Fibonacci confluences. All right, Fibonacci confluences. These are areas with many, many Fibonacci levels lining up. Fibonacci retracement from a long term, and then you narrow down to a short term. You find another Fibonacci retracement that lines up with your level. All right. So what I like to do, all right, together with my Fibonacci retracements and extensions, I like to combine them with graphical levels as well. All right, graphical levels. So what do you mean by that? Basically, it's just levels that appear in the market. For example, all right, we know that if you are looking for resistances, you want to look at the swing highs, all right, because that's where price made a push up from then on. All right, let me just push away from there. All right, what we've covered in the previous webinar on support and resistances. All right, you want to look at the swing highs. All right, that's where price made a push up and then it rejected. All right, so this level, the swing high resistance, is a strong level to look at. All right, so that's the horizontal swing high. All right, you also want to look at the swing lows if you're looking for a support. All right, so that's where price pushed down and made a rejection. So this is a level that the price action is basically telling you, hey, that's a really strong support level. Price is not going to be breaking down from below there very, very soon. All right, so if price reapproaches that level, you want to look at it again. And of course, there are also levels where there are overlaps. All right, so what it means is it used to be a support. All right, it used to be a support and it broke above, and then it came back. All right, sorry, it used to be a resistance, it broke above, it came back, retested as a support. All right, so these are overlap. This is what I would call overlap support, because now price is above it, right? So if it comes back down again, I would expect, okay, there might be a reaction. That's what we call an overlap. There's also what we call the pullback. All right, so it used to be a resistance and it pushed above, and now it's coming back, pulling back to retest. All right, so what I expect is, because this level used to be a support, used to be a resistance, it could potentially be a support. All right, push up from here. So that's the pullback support or resistances. All right, so these are the graphical levels that I like to look at in price. All right, and how I deduced that the 38.2 is a pretty strong level to look at. I just look back to your left. All right, and immediately you can see there is this level that used to be a support, and now price broke below it. All right, follow the movement. See that price came down, pushed back up. So this used to be a support. So price hovered above before pushing strongly below, and this, as price is coming back up, what I'm expecting is that this should be a horizontal pullback resistance. All right, and it lines up quite nicely with the 61.8% extension. 38.2% is also quite near. All right, so this really strong area over here, I'm just going to use a box, all right, to highlight this area. All right, this is a very strong resistance area. Okay, because why? There are basically three factors that tell me, okay, this is pretty strong level you want to be looking at, right? You don't want to miss out. All right, because first of all, graphical level used to be a support, price broke through, now it could be retesting as a resistance. First point, graphical level. Then the second point, take a retracement. 38.2% is pretty near there. All right. Third point, extension. All right. You take this zigzag movement. You expect that price will make the zigzag movement, and where does the Fibonacci extension levels line up? All right. It lines up again at this level, 61.8, 78.6. All right. Pretty close to this level. So that's how I deduced, all right, this point, all right, this level is pretty strong. All right, you can probably see a really nice reaction, a really nice rejection of this level to push lower, because we know that the trend is a downtrend, right? And sure enough, all right, when price came back to test, it actually tested twice at that level before pushing much lower from there. All right, so you can see price came up, retest twice before pushing much lower. All right, so that's how I like to use Fibonacci retracements, Fibonacci extensions. You combine them with graphical levels, how you find support and resistances just by looking at how price has behaved in the past. All right, you combine them all together, use it together with basically your Fibonacci magic, right? You want to find Fibonacci retracements and extensions that line up together to find that level to play off of. All right, so it really depends on what kind of a trader you are. All right, if you know it's a downtrend, you want to trade with the trend. All right, you want to find the resistances that price could react off of and push lower to continue on its downtrend. Then you can use these techniques. All right, you can use Fibonacci together with your graphical levels. All right, to find strong areas to play off of. All right, of course, Fibonacci is not a foolproof method. All right, it's not 100%. All right, if you find a level that maybe like tens of hundreds of Fibonacci levels line up at, there's no guarantee. All right, there's definitely no guarantee that price would definitely be looking at. Price will definitely be reversing from that level, or there's definitely going to be a strong reaction at that level. All right, you want to always have many different maybe use indicators or something that can support your so-called your thesis or your idea that there's going to be a reversal there. All right. So what you need to understand is trading is a very probabilistic game. All right. It's a game of probability. Right. So the more levels, all right, how I like to think about it is if there are more levels that line up at that level, it just increases the possibility, the probability that uh that there will be a reaction at that level. All right. So if I find just a graphical level, oh, there's a pretty decent probability that there will be a price reaction there. All right. So I'll give it a pretty decent probability of it happening. All right. And if it lines up with a Fibonacci retracement that basically shows that okay, there's a pretty strong resistance. All right. Then I would think that there's probably going to be a higher chance that there's going to be a reaction. And if there is a Fibonacci extensions as well, all right, or if there's also a long-term Fibonacci retracement, then the possibility of a price reaction is much higher for me from then on. But there's always, you got to remember that there's no guarantee that there will be a price reaction there. It's all just probability, all right? So higher probability you have is always much better, and that's why I like to use Fibonacci confluence level. It gives me, if I'm able to find these levels, it gives me a lot more confidence, and right, there's a higher probability that price is going to react there. And of course, if there's high probability, chances are, all right, there's a really strong reaction from there. All right, as you can see in the euro dollar, all right, really nice rejection from here. But it's all a game of probability, all right. There's no such thing as 100%. It will definitely happen, all right. Fibonacci is just one way that you can basically find key levels, all right, key levels that you can play off of. Whether you are a contrarian trader, you want to take the small movements against the trend, or if you are a trend following trader, you're looking for opportunities to ride the trend, okay, follow with the trend. Fibonacci can still provide you ways to find key levels, to find your entry points, or you can also use them to find your take profit areas, all right, where you want to take profit before price reacts in the other direction. All right, that's where you can possibly use Fibonacci. You can also use them in your stop losses. All right, you can use them to find strong levels that if price were to break above or below your entry levels, the next level where it could react at. All right, that's where you could possibly place your stop loss slightly further. And that's how you can use Fibonacci to derive a trading strategy. All right, of course, there's no 100%. I can't stress this enough. All right, there's no 100%. All right, that it will happen. All right, you cannot just take my word for it. All right, whatever strategy you come up with, whether you're using Fibonacci or something else, you always have to back test it and you make sure that strategy works for you. Okay. But what I can tell you is that Fibonacci, all right, if you're able to find these strong levels of Fibonacci confluence, like right here, all right, there's a pretty strong chance that price is going to react at that level. All right, if we were to look at Aussie dollar, I saw this earlier today. All right, so let's just take out all these levels first. All right, and we want to replay once again. Okay, so let's say I'm going to replay it to somewhere here. All right, so what I'm seeing over here is that price pushed up and it made a really strong push down below this last low. All right, and what I'm expecting price to do, it came down, pushed back up, made this lower high, and I'm expecting it to push much lower. Okay, so what am I going to do? Right, of course, once again, use your Fibonacci retracements, and this is a pretty solid move for me. One nice line up. All right, one strong move up. Price is pretty much following it. All right, not very far movements, not like chopping across the trend line. All right, so this is a clear movement for me. So one thing to take note, all right, from the point where you end your Fibonacci retracement, all right, how do you know which levels are valid? All right, it's basically the levels that have not been broken yet. All right, hasn't been broken yet. So in this case, all right, from this point onwards, you can see 23.6 destroyed, 38.2, 50, 61.8, all destroyed. All right, so at this point, I would only consider 78.6, 88%, 127, 161.8%. All right, so these levels are the only levels that I'll be looking at. So after we do this, all right, what are we going to do? We're just going to find extensions. All right, and you can see this very clear zigzag movement, 1, 2, and 3 up here. All right, this clear zigzag movement. So what am I expecting price to do? All right, what am I expecting price to do? Basically, it's to make this zigzag right here. Okay, so what do I see? Straight away, you can see this area of confluence. All right, if I were to use a box, all right, 78.6% retracement lining up really, really nicely with the 61.8% retracement. All right, so this is a support area that I'll be looking at. All right, why? Strong area Fibonacci confluence. And of course, I saw this earlier this morning. All right, and it of course played out. So that's where I'll be looking at these levels. You can see a nice little reaction. Why the strong Fibonacci confluence level? All right, there's a strong zigzag move from here, and where does it hit afterwards? It's a bounce up. Why? Because you found this Fibonacci confluence area that has basically these are levels that people are already looking at. All right, so you want to be looking at those levels too. All right, so when you have many levels lining up, 78.6, 61.8% extension, these are levels that you need to take note of. All right, basically you need to take note of these levels. All right, so that's how I like to use my Fibonacci retracements and extensions to find really key levels. All right, key levels are really important to look out at. All right, so because you expect that those levels, there will be price reaction. All right, the price reaction is what you're playing for. Okay, so that's all I have for you guys. All right, that's all. Actually, that's all I have for you guys. I just wanted to show you guys how this Fibonacci magic can really work. All right, how this Fibonacci retracements and extensions can really work to help you find key levels to play off of. Of course, the strategy that you adopt yourself. All right, if you're looking to to trade in the markets, the strategy that you adopt yourself needs to have more comprehensive strategy. All right, to give you an idea of where you want to enter, where you want to put your stop loss and take profit and things like that. All right, so but Fibonacci retracements and extensions can be really good things to look at. All right, really good things to look at because the market is really responsive to these levels. And what I like to use, all right, what I found to be really responsive, that the market is really responsive to, is levels of Fibonacci confluence. All right, so you always want to find that level that there are lots of levels lining up. All right, so find a graphical level, find a retracement, find an extension, and if they all line up pretty much around the same level, you can expect there's probably going to be a strong probability that price is going to react from that level, right? That's how I like to use Fibonacci magic. All right, so that's what we call Fibonacci magic. All right, so that's all I have for you guys today. All right, I hope you guys enjoyed this presentation on Fibonacci retracements, extensions, the history of Fibonacci. It's all pretty interesting. All right, and more than just being interesting, it's very useful for you if you were to be trading the forex markets by yourself. All right, so that's all. That's basically all I have for you guys today. All right, if you guys have any questions, we still have about 4 more minutes. All right, we still have about 4 more minutes before the end of this webinar. So if you guys have any questions, just drop them in the questions tab. All right, I'll be happy to answer them for you. Okay, seems like there are no further questions on today's webinar on Fibonacci magic. All right, I hope you guys found this session useful. All right, I hope you guys found this session useful to help you basically find strong key levels of support and resistance. And I hope you guys can find some good ways. All right, adopt this in your strategy. All right, I highly recommend that you look at Fibonacci retracements and extensions to adopt them in your trading strategy. It's really quite a good strategy to look at. I myself use it as well. All right. If there are no other questions, all right. I thank you guys for joining me today on today's XM webinar on Fibonacci magic. All right. So if you guys don't know, all right, XM is providing forex webinars for you guys throughout the week. All right, from Monday to Friday. So on today, Tuesday, all right, Tuesdays and Thursdays will be Tradepedia webinars where we'll basically be showing you guys teaching you guys more about forex trading and the different concepts and indicators and stuff like that to help you with your forex trading journey. All right. And on Monday, Wednesdays, and Fridays, there will be the exclusive webinar series where we'll be basically providing you with the top fundamental news of the day and the top technical setups that we are looking at ourselves. All right. So do join us. All right. Do join us if you are interested. All right. To sign up on xm.com/Singapore-webinars. All right. And I'll see you guys for this. See you guys in the upcoming webinars to come. All right. So if you guys have no further questions, all right, that's all I have for you guys today. You're very welcome, Mostek. You're very welcome, Alexis. All right. I hope that today's session on Fibonacci retracements and extensions has been useful for you guys. All right. Hope to see you guys soon. All right. Trade safe, stay safe, and I will see you guys another time.